Hi everyone, this is Liam McMahon. I'm a currency strategist over at GlobalFxClub.com, and I'm here today to talk to you about Pound Kiwi, the daily chart of Pound Kiwi specifically, and what we may see from the pair over the next couple weeks to months. So please take a moment to pause the recording, read the risk disclaimer, which should now be on your screen, and then we'll move to the chart. Alright, so I have to confess that Pound Kiwi is not a favorite pair of mine. I find that the volatility associated with it makes for somewhat challenging trading, and I tend to get stopped out a lot when I try to trade it. Of course, the advantage to Pound Kiwi is that if you do catch one of these moves higher, I mean, here we moved from basically 183 to above 2 in a very short period of time. So you can catch some very explosive moves on the pair if you do time it right. So for that reason, I do think it's worth looking at, but it tends to be a fairly challenging pair to trade. With that said, Pound Kiwi, I think right now is in a very interesting place, and I think we could possibly be seeing a setup for new highs in the pair above that 2 mark, probably even as high as 205 or maybe even above. And a couple reasons for that. First reason is moving average developments. All right, so here we have the 50-day EMA in red crossing above the 100-day and the 200-day. Two bullish crossovers, and really barring some sort of somewhat significant sell-off at the end of the week, we will likely see the 100 cross up above the 200 EMA by the end of the week this week. Again, giving us not only a full complement of bullish moving averages, but 3 significant crossover signals as well. Secondly, the other reason I think we may be setting up for new highs is the behavior that we saw on this retracement from the rally from 177 to about 2. We saw the pair rally very nicely, very explosively up here above 2 before, again, a very nice pullback. That pullback, however, stopped almost picture perfectly on the 50% Fibonacci retracement. You can see 2 candles here tested that fib and held on a daily closing basis, and we've moved higher from there. Whenever you see a pair trade a 50 fib that nicely, there is a suggestion that the measured move higher is going to take it to new highs. Usually works out that the ABC measurement works, so A, B, C, and then we'll see another AB move from that C pullback, which again here would give us above 205. But you don't even need to get a move that high to get good risk-reward ratio out of this setup. All right, so right now we're sitting at 192.83. All right, the 50% fib is about 189, so it's about 400 pips lower. So for most people, me in particular, but most traders don't like to have a 400 pip stop, and I certainly understand that. So you want to use this, you don't want to necessarily put your stop below 50% fib, but you do want to use that, the fact that that fib held as context for what we may be seeing going forward. You can see these past 2 days, the 50-day EMA has held very nicely. And also today we got some pretty good news out of the UK. Both in terms of a better than expected employment report, and also now we have a united MPC Monetary Policy Committee that all voted now for a unanimous vote to leave the stimulus unchanged, which is at least arguably bullish for the pound. So if we are going to see the pound continue to gain strength, or even if we're going to just see the Kiwi continue to weaken and the pound stagnates, we are, I think, likely to see new highs in pound Kiwi above this 2 mark. All right, it's again about 700 pips or so higher to new highs. So if you can find an entry, that's certainly something we're going to look for. What I like to do is I notice that context. All right, I see that we stopped at that 50% fib, and then I move down to a 4-hour chart, and I start looking for a little bit more of a precise entry because, again, I have no interest in having a 400 pip stop. So from here, I start to draw some lines. All right, so we have a very nice sharp descending trend line that we've had 1, I'm going to count this as 2, and then 3 or so, 4, at least 3, maybe even 4 touches on that trend line here on the 4-hour chart. All right. So if we can see a breakout above this last touch and off above the trend line, we could have a nice breakout trade on our hands for, again, that move higher. What the context tells us is going to be a move towards above 2, basically. If we move down to the hourly chart, all right, you can see, again, basically the at least 3 tests, 1, 2, and 3, and again, it's above 194 would be the level to start to look for a breakout trade. The other thing that is worth noting, and I'm not entirely sure if this cuts necessarily in the bullish favor, but it is worth noting that we do have what appears to be a head and shoulders here on the 4-hour chart. High left shoulder, but a higher head and then a lower right shoulder. We sold off actually very nicely from there. All right, you can see we even have sort of rallied up to almost retest it. The measured move of an inverse head and shoulders is basically that. All right, bottom of the head to the neckline. If we activate this drawing and we move this line, you can see we've actually exceeded the measured move. So I'm a little bit less concerned about that head and shoulders, but it is worth sort of paying attention to. The other thing now that you want to keep an eye on here on the 4-hour chart, here is that trend line that I'm looking at. All right, you can treat this as some sort of flag or pennant pattern, basically, if we can see that move above 194. I talked about how a move back towards that 50% fib on the daily chart suggests higher prices. Well, here on the 4-hour chart, you can see this lower time frame retracement actually held a 50% fib very nicely as well. Again, to me, suggesting that we're going to see new highs. In this case, new highs would be a high above 194.65, which is the high that we saw here on this initial rally. But a new high above there will put us into challenging this previous neckline, and I think put that daily 50% fib into play for a move back above 2. All right, so that's what I'm looking at here on Pound Kiwi. If it's a pair that you have the courage to trade, I think there are some very nice bullish setups setting up for this pair over the next maybe 2 to 3 weeks. I think we could be in store for a large move higher. If we do see that large move higher, it will be in part because we will see the pound correct a little bit from its recent weakness, and in part because we see commodity currencies continue to suffer. May suggest some risk off in the future, but it's definitely something to keep in mind for the next couple weeks. So I hope that's helpful. As always, if you have any questions, head on over to GlobalFxClub.com. I'll be happy to talk to you there. Good luck trading the second half of the week, and I'll talk to you soon.